So as you look at this chart right here, this price movement range over the past 6 months for all the symbols, what have you just determined by looking at this? Think about price movement and the risk that it could present. Ask yourself, depending upon your risk tolerance, which pairs might be more appropriate for you. So certain times of the day, certain hours of the day may present more or less volatility. On average, again, what we're doing is we're taking the price movement and we're breaking it down into what is the likely expectation. Now, what are other tools that you should add to this, by the way? You could check out the economic calendar available right here at IBFX.com, because the economic calendar will narrow down those days and times where different economic releases could impact the psychology of the market, increasing volatility. Okay, again, increase of volatility I will always equate to risk. And I don't mind risk. Again, as a trader, I feel my job description basically starts with manage risk. And risk is being in the market. So the more time I'm in the market, the more I'm exposing myself to risk, which is why when I'm trading a longer term time frame, I feel that I'm exposed to more risk. But again, I don't mind risk. It's just part of the job. Okay? We have to take it on. It's like if you're a swimmer, you know you're going to get wet. You're jumping in that pool. Well, I'm jumping in a pool, so to speak, too. So there's certain things that I have to understand and measure so I can gauge a better expectation of what type of characteristics I'm going to deal with. This applies to the pair. This applies, as you notice, the time of day and even the day of the week. All right? So I wanted to kind of segue to this for a moment. Let's go back to the expected price range. And again, break that data down, that daily data down to the different ranges per candle. And again, you'll notice that the shorter term candles, if given 15 minutes and I asked you to walk as far as you could or run as far as you could, you're probably going to cover less ground than if I told you, here's 24 hours. See how far you can cover. Price movements much like that. Given less time, usually you're going to have less price movement. Given more time, more price movement. Patterns on a 15-minute chart are generally going to be smaller when you look at the alerts on the PRS. There might be 50 15-minute candles, but because each candle might only be moving maybe 15, 20, 30 pips, again, be specific to the actual symbol that you're looking at. But for example, in the Euro US dollar, we might be only moving 15, 20 pips per 15-minute candle. And each one of those 15-minute candles is going to build whatever that pattern is that I'm looking at. So generally speaking, they're going to be smaller in price range. Again, usually, generally speaking, as opposed to if I looked at a 240 or daily time frame, 240-minute or daily time frame pattern, where the price range is much larger, and I might have 20, 30 of these 4-hour candles forming a triangle or a channel or a wedge or head and shoulders. The pattern is generally going to be larger because the range of each candle is larger. Make sense? Okay, this again, just a way to understand what type of risk you might be taking on. And if I enter a 4-hour chart, usually I'm going to be in that trade, me personally, for a longer period of time. Again, in the market, equate that to risk. Please don't be one of those pound yen traders who are hopping in the market, looking at the volatility going, wow, that's what I could put in my imaginary piggy bank. Don't do it. Don't do that. Understand yourself. Understand what kind of volatility you can handle. And this is where a lot of times quieter pairs or even the Asian session might be a great place to start if your risk tolerance is low because of the, generally speaking, more quiet price movement expectations. So make sure you know what kind of fight you're when you put on your gloves, make sure you know what kind of fight you're up in for. You know what I'm saying? Make sure you know who your opponent is. That's what I'm doing right now. I'm figuring out who my opponent is. What kind of characteristics do they have? What's their personality? Each pair has this. You can look at the pound US dollar, the cable, the pound sterling US dollar, and get the same type of price breakdown. What does it do per hour? How does it behave? What are the more volatile trading hours? In fact, the pound yen is interesting because while a lot of pairs will typically peak in their volatility between 8 and 11 a.m. Eastern Standard Time, the pound yen typically peaks when Frankfurt and London open, and then again when New York opens. So there's actually two peaks on the pound yen, which makes it a little bit different. Don't assume that because you've looked at the rhythm of one pair that you know the way the market works. You've got a list here of each currency. Use it. And then once you've looked at the different characteristics per hour of day over the last 1, 3, and 6 months, look at the day of the week. Then you can break it down into the specific time frames.